Loan loss provisioning is how you set aside reserves against overdue loans. Bankayo splits it into two screens: provisioning criteria under organization and provisioning entries under accounting. The chart of accounts supplies liability and expense detail, GL accounts. These are not the loan portfolio or income accounts on a loan product. Provisioning uses its own reserve pair on each aging band. Loan provisioning criteria bind loan products to overdue day bands. Fineract categories such as standard, substandard, doubtful, and loss come from the template. You set max overdue days, reserve percentage, and the liability and expense GL on each band. New criteria runs a wizard: name and loan products, then one step per category. The first band starts at day 0. Each following band starts the day after the previous max age. Bands must be contiguous. This walkthrough opens the wizard only. On a live tenant, you would complete every category, review, and create. Click a row on the list later to edit bands or GL accounts in one table. Provisioning entries calculate reserves for a date on or before today. Fineract needs at least one criteria or create is refused. You do not pick a criteria on this screen. The engine uses all of them. New entry picks the date. Tick Create Journal Entries to post the reserve immediately, or leave it off and post from the list when you are ready. Only one entry per date is allowed, and there is no delete. Click a row to see lines: office, loan product, category, overdue days, amount reserved, and the liability and expense accounts from criteria. Create Journals posts those amounts to the ledger. After Journals post, the reserve lines appear under journal entries alongside loan movements, savings postings, and teller cash. Filter by date and office to audit the provision. That is the full chain: chart of accounts, criteria on loan products, provisioning entry for a date, then journal entries on the ledger. See help for loan loss. Provisioning for the written walkthrough.